Hi there, welcome to kneppyinvests. Time for a technical update, and in this video, I'll be looking at 6 charts for 6 different companies. Although technically, one of these charts we won't be looking at a company; it's in fact an ETF. One of the most, won't say famous ETFs, but one of the most talked about ETFs over the past few years. That'll become apparent when I look at it. And also be looking at 5 ASX listed companies, including A2 Milk. We have seen an interesting rise in the share price of that company over the past few weeks. And to be honest with you, the chart does look a little bit more interesting than it has over the past 2 years. So what are these 5 other companies and this ETF that I'll be looking at in today's video? And those other 4, is it 4 companies? Yeah, 4 ASX companies are NRW Holdings, Pointsbet, Bravura Solutions, and Clinuvel. The reason I'll be looking at those other 4 companies is because the chart does look promising. Looks like the share price potentially is turning around for each of those 4 companies. And the ETF I'll be looking at is ARK Invest. So this is Kathy Ward's ETF, or one of her ETFs, and the price of that ETF has been going down for about probably well over a year now. But again, just like the other companies I'll be looking at in this video, potentially that is turning around. The reason I'm interested in ARK Invest, and I have no intention of ever buying this ETF, is because I think it is a good proxy for what's going to be happening with interest rates in the future. So you could look at bond yields and that sort of thing, but because Kathy Ward's company ARK invest in those sort of companies that are not profitable, a long way from profitability, but have the potential to grow quite a bit over the next 10 years, those sort of companies are going to be significantly hit with their valuation and the share price when the market expects the interest rates to rise. So if we do see ARK Invest ETF starting to rise, that is telling us the market expects interest rates not to rise in the future, potentially even to fall. And we are starting to see the signs. The market is expecting the economies in the world to go in recession. And when the governments and the reserve banks of the world, or central banks of the world, realize the trouble the economies are in, instead of rising or raising interest rates, they will actually lower interest rates. And if that happened, ARK Invest and the companies that ARK Invest invests in, well, actually it's innovation, ARK Invest Innovation, those companies will benefit over value companies, over those more mature companies like Woolworths, Coles, Walmart, those sort of companies. First company we're going to look at, and really the whole motivating force for me doing this video today, is A2 Milk. Now, this is the daily chart for A2 Milk going back almost 1 year, in fact, over 1 year, we'll say about 15 months. And the reason I want to go back 15 months is because about 15 months ago, I think it was May 2021, was the last time this company released a profit downgrade. So it's been 15 months without a profit downgrade. That's actually a good sign for this company moving forward. That means the management is aware of the problems this company has been facing, and they are addressing those problems, and potentially we won't see any more downgrades. In fact, I'd say on the probability side, it's more likely we'll see upgrades in the future over downgrades, particularly if management have been a little bit conservative with their forecasts. And the reason I want to go back 15 months again, last time they released a downgrade also, because the share price had been trading in a channel from May last year all the way through to April this year. And then the share price went through the bottom of this range, which was support. And as soon as it went through the bottom of the range, through that support, the share price dived. It fell from $5 all the way down to less than $4 in quick succession. So this is just the breaking of this support level. Those traders, those technical-minded people saw the break of that support and they sold. That's why you saw 2 big down days when that support level was broken. Now the share price has risen over the past few, we'll say about 4 trading days. One of the reasons why the share price did rise was on the back of a news article in relation to A2 Milk getting into America with their infant formula. Maybe you've been following the news. There's been a significant shortage in infant formula in the United States because of some problems with one of those infant formula manufacturers. I can't remember exactly what it was, but I think it had to do with tainted infant formula. And the last thing you want to do is to give your baby some bad infant formula. So that company reputation probably has taken a massive hit. Exactly like we saw in China all those years ago when some babies actually did die from tainted infant formula. And that's one of the reasons why A2 milk had seen their share price rise significantly, the valuation of the company rise significantly because of that China story. And because of that news article, share price rose a fair bit on that one day. I forget exactly how much, something like over 10%, maybe around about 10%. The company released, or actually went into a training halt and announced those rumors weren't exactly, well, that news article wasn't exactly true. The market didn't really believe it because the share price didn't fall. In fact, the share price has risen over the next 3 or 4 trading days, and the share price has moved beyond that old support level, which became resistance. And because the share price has moved above that old, or actually new resistance level, potentially that resistance level has been broken at $5. And if the share price of A2 milk can stay above $5, potentially because they do release some news flow in regards to United States, that would be a good sign moving forward for the company. Now, over the last year or so, 15 months, every single time the share price has gone above the 100-day moving average. So in this chart and all the charts I'll be showing you today, what I've included here is a 100-day moving average, then 4 other moving averages between 20 days and 60 days. And I just group those 4 moving averages together. And whenever I see, excuse me, whenever I see those shorter term moving averages come together, like we have seen with A2 milk over the past month or so, that is telling me there's a little bit less volatility coming in the market. We're seeing less trading, less traders, day traders are interested in this company. And that's actually really good news for those long-term holders. And just recently, we have seen the share price pop up on strength because of this news article. And the share price has moved above the 100-day moving average. It needs to stay above that because what we want to see is the share price remain above all 5 moving averages. And if it does, that means a new uptrend is developing. The other good news is the share price right now at $5 or just above $5 is around about a 4-month high. Share price keeps increasing, and if we get a 6-month high, that's only good news for this company. The other good news would be a really good financial report from the company in August. Now to NRW Holdings. When you do look at the long-term picture of this chart, this goes back to July 2020, so this is just about a year. Share price really is doing nothing, just going sideways. We've seen a little bit of hype in this, well, I wouldn't say hype, but we did see some positive share price action back in February off the back of their half-yearly or yearly results. Share price rose from around about $1.75 all the way to a high of $2.25 in fairly short period of time. And then the share price has pulled back. But the share price did pop up during a week on the back of a trading update, a positive trading update. In fact, I think it was a profit upgrade from the company, and that's why the share price has popped up, and the share price is moving towards those levels we saw back in February, March of this year. If the share price can remain or get above $2.25 and remain above $2.25, that would be good news moving forward for NRW Holdings, because that would mean a multi-year high for the share price of this company. Now, I did have a quick look at NRW Holdings, just the valuation of the company. Just wanted to see if maybe these levels are good value for this mining services company. And I have found you can find really good value in some of these mining services companies. The market at this point in time does not like these sort of companies, and there might be value, particularly if mining companies start to spend a little bit more. And I think over the next 5 years, mining companies will have to spend a bit more on development of mines, maintenance of mines, and that sort of thing. So I think there is a potential that these mining services company can benefit from that. Now, I wouldn't buy many mining services company right now because the sentiment in a lot of these companies in this whole sector is fairly low right now. We want to see return to some good positive sentiment in these companies. But the main thing and the good thing is the valuation of a lot of these companies is fairly low right now, and you can take advantage of that just on the back of any change in sentiment, any change in the trend of the share price. Now on to Pointsbet in this chart. Instead of going back 1 year, this one goes back to November of last year. And back then, towards the end of October, start of November, share price of Pointsbet was above $10. And you can just see here a well-defined downtrend from then all the way through to the end of July. Share price just kept on decreasing and decreasing and decreasing. So you don't buy, and this is the reason we have that saying, don't buy a falling knife. This is definitely, or was definitely, a falling knife situation. We just don't know how low the share price can go. But it does look like potentially share price low was reached towards the middle of June. And remember, June was a really bad month on international equity markets. The share price of Pointsbet fell below $2 for a brief period of time. But the share price has bounced over the previous few weeks. In fact, we'll say over the previous month. And just like with A2 milk, one of the things I do look for is a tightening of those 4 moving averages, those shorter term moving averages. You can see between November last year and July this year, the spread between those four moving averages was quite large. That is telling us that downtrend is a well-defined downtrend, and there's no reason to buy into this company just yet, unless you've done a valuation of the company and the valuation of the company is screaming massive buy. But even in those situations, I'd probably just wait for a change in sentiment. This is just the way I look at things these days. And what I'm looking for is a tightening of those 4 moving averages. And we've seen that with Pointsbet over the past few weeks. Not only that, we're starting to see the shortest moving average, which is the 20-day moving average, get above the other 3 moving averages. It's not above the 100-day moving average just yet. But if the share price keeps on rising, we might see that. We've also seen a lot of volatility in Pointsbet over the past, say, 2 weeks. The share price has risen significantly on a couple of days and fallen significantly on a couple of days. And this is telling me that there is day traders right now playing with Pointsbet. Whenever I see day traders playing with the company, that does get me a little bit concerned. But there is a change or potential shift in sentiment here, potential shift in the trend of Pointsbet share price. And this goes back to what's happening with ARKK Invest innovation companies, though Pointsbet would fit very well into that group of companies. So again, this could be one of those companies that sort of is a proxy for what the market, for what people, particularly the bond market, what they're all thinking might be happening with interest rates in the future. Because if Pointsbet does become profitable, those profits, that positive cash flow is well into the future. Pointsbet might not be profitable for another 5 years, which means if interest rates keep on increasing, the present value of all those future cash flows are going to be significantly lower than if the interest rates were significantly lower. So the reason why I think the market is getting interested in Pointsbet right now is the possibility that interest rates will start declining in the future. Another company I really needed to look at is Clinuvel, and for full disclosure purposes, I am a shareholder of this company, and I'm very bullish about the future of Clinuvel. And just like Pointsbet, you can see a well-defined downtrend for this company from about October last year all the way through to just recently. Those 4 moving averages, shorter-term moving averages, nice spread between them. Our share price just kept on dropping, and with that negative sentiment and the share price trend going down, we just don't know how far the share price can drop. But the further the share price fell, the more interested I was in taking or adding to my position in this company. So I was a shareholder of this company, or still am a shareholder of this company, but I was thinking of adding to my position because Clinuvel is profitable and they are operating cash flow positive and they are growing at a very strong rate. When the company did release their Appendix 4C, and this company is not obliged or required by the ASX to release quarterly updates, but they've decided to do that for full transparency and so their shareholders can understand how they are performing. On that day, when they did release their Appendix 4C for the June quarter, we don't know why the share price dropped 8% on the day. It was an absolutely stellar Appendix 4C. So I think there was a little bit of fear in the market, and there could have been some fairly smart traders who took advantage of that fear, and that's why the share price dropped 8%. In fact, the share price dropped from about $17.50 to about $15.50 on that day on the back of a really good result. But the share price has rallied because it was a really good June quarter from the company. And that's why the share price is rallying right now. And the share price has risen from $15.50 to $20 over the past 2 weeks. And you can just see how those 4 moving averages have come together, and now we're starting to see those 4 shorter-term moving averages starting to go up. And the shorter-term moving average is almost approaching, almost overtaking the 100-day moving average. So it's potential crossover in those 2 moving averages. And the other thing here is the share price at $20 means we are at about a 5-month high with the share price. One of the things I do look for is at least a 6-month high in the share price, but we are approaching that with Clinuvel right now. So it does look like there is a shift in sentiment. There is a change in trend in the share price for Clinuvel, and that's really understandable if you take a look at their Appendix 4C for the June quarter. Now, a company I have held in the past is Bravura, and one of the reasons I sold this company is, or if you go back to August last year, you can just see the share price dropped massively on the back of their full-year results. Share price fell from about $3.80 all the way down to $3.10, and that was a catalyst for a shift in sentiment, for a shift in the trend in the share price. And just like the other companies I've shown you in this video, a well-defined downtrend from that release of that financial data in August last year all the way through to recently. In fact, the last few trade days, we have seen a potential shift in sentiment, just like we're seeing in other companies on the ASX, and those 4 moving averages are coming together. Share price did increase a fair bit in one trading day, something like 9%, I think I remember. And then the next day, share price kept on rising. That's actually a fairly bullish sign. And the share price has gotten above, reached above the 100-day moving average. First time that has happened since about, we'll say, October of last year. So there is a potential shift in the way the market is viewing Bravura Solutions. But I think it's going to be very important how their full-year results or half-year results come through, how the market views that half-year or yearly report. And this could be the market anticipating some good news from the company. Maybe that's why the share price has bounced in the last few trading days. So this is looking way more interesting than it has for at least 1 year. Now on to ARK Invest, and this is the chart for ARK Invest going all the way back to about, we'll say, June of 2021. Now, it looked like the share price was of ARK Invest Innovation going sideways between June last year and about November last year. But before that, we did see the share price of this ETF actually fall and move into a downtrend. And then there was a consolidation period here. When you do see the share price going sideways of anything, we don't know which way the share price is going to go when it comes out of the consolidation period. So you just want to get confirmation whether the consolidation period is leading to a new uptrend or a new downtrend. And in sort of middle of November, we had confirmation that the consolidation period was coming to an end and a new trend was downtrend was developing. And that downtrend has lasted from, say, early or late November of last year all the way through to a few weeks ago, even last week. And the share price of ARK Innovation in the fund here, ETF, has moved from $120 all the way to a low of $36. But it does look like sentiment might be shifting in this company and the share price might be turning up. I would like to see the share price continue to climb from here, because right now the share price is only at, we'll say, about a 3 to 4 month high. So I prefer at least a 6-month high, but it does look like sentiment in this sort of sector, this unprofitable, long time to profit sort of companies, is turning around because of this expectation that instead of interest rates rising, we'll start to see interest rates fall because of economies around the world moving into recession. Now, I actually am not certain that we will see economies moving into really bad recessions simply because of what's happening with unemployment right now. If we don't see a significant rise in unemployment, we might see the economies remaining sluggish, but inflation remaining fairly high because people are still spending. That's one of the really interesting things that have come out of retail spending over the past few months, is that retail spending remains fairly elevated, which is not the thing you would think you would see in a recessionary environment. So even though the United States has had 2 GDP drops in 2 successive quarters, they are not in an official recession just yet, because they don't define an official recession as 2 quarterly drops in GDP. There is this organization that defines when the country is in a recession, and that organization has not yet decided whether the United States is in recession just yet, because they look at different factors. And one of the things they probably do look at, I'm not absolutely sure about this, but one of the things they probably do look at is the unemployment rate. There might be a lot of underemployment, but they do look, and participation rates are dropping in the United States. The other thing you have to take into account, but unemployment remains fairly low, and there's a lot of job openings, and there's not enough people or unemployed people to fill all those jobs openings. So I'm a little bit unsure whether the bond market and a lot of these people who are thinking interest rates will start falling because economies are moving into recession, I'm not sure if that thesis will play out in the long run. That's all I have for this technical update, looking at Zip, 4 other companies on the ASX, and ARK Innovation Fund. Their ticker code, I believe, is ARKK. And the reason I wanted to include all these companies is because there is a possibility. There is a shift in sentiment and a change in the trend of the share price of all these companies. So if you do like a few of these companies, if you are wanting to invest in these companies for the long term, maybe now is the time to buy some of these companies or this ETF. If you have any questions about any company or ETF I have shown in this video, I'd love to hear your thoughts, your opinion, or your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.